Hello everyone, I'm Sudha Udaya. Welcome to today's unit in the Building and Construction Programme. Before we begin, I want to remind you of the purpose of this programme. Each unit is designed to give you the knowledge, skills and industry behaviours required to become a competent and confident building practitioner in Australia. Throughout this course, I'll be drawing on more than 30 years of hands-on experience in residential and commercial construction. My goal is to connect the theory directly to real project situations, showing you how the National Construction Code, Victorian regulations, WHS requirements, and industry standards apply on actual work sites. As we move through each topic, think about how these principles translate into the decisions builders and site managers make every day. By the end of each unit, you should feel more prepared to apply these concepts in practical, safe, and compliant ways on the job. Let's get started. Today's session is Module 3, Volume 1, Section 1. Identify the requirements of the business. This is one of the most important modules in the entire business operations unit because it lays the foundation for how a building and construction business is established, structured and managed in Australia. In the construction industry, we deal with high-risk environments, complex legal frameworks, multiple regulatory controls, and strict compliance obligations. If you want to operate a successful business, whether as a subcontractor, sole trader, builder, or commercial construction entity, you must understand the full range of business requirements from day one. Across my more than 30-year journey in the building and construction sector, having completed over 450 homes, townhouses and apartments in Melbourne, I've seen many businesses grow, succeed, fail and collapse purely based on how well or how poorly they understood their business requirements. Compliance is not optional. Financial governance is not optional. Taxation responsibilities are not optional. Understanding the Competition and Consumer Act, industry codes and licensing obligations is not optional. These areas form the backbone of business survival. In today's session, we will walk through key concepts such as legislation versus regulation, tax obligations including BAS, business registrations, operational requirements, industry trends, financial systems, policy development, risk management and contingency planning. By the end of this lecture, you will have a comprehensive understanding of what a business must have in place before it can operate legally, safely and profitably within the construction industry. Let's get started. By the end of this session, you will be able to identify the core requirements of a construction business, differentiate between legislation and regulation, locate and interpret key legislation and regulatory obligations, understand the Competition and Consumer Act and Industry Code. Enforcement. Identify registrations, licenses, permits and tax requirements. Understand BAS and the role of the Business Activity Statement. Identify operational requirements for construction business activities. Stay up to date with industry trends and government information sources. Understand project cost estimation basics. Understand taxation, payroll, bookkeeping and legal responsibilities. Develop business systems for financial management. Establish, document and communicate business policies and procedures. Identify and respond to industry and business changes. Conduct risk assessments for adverse outcomes and impacts. Understand financial risks and risk analysis methods. Prepare and interpret example. Risk assessment structures, including likelihood measures. These objectives provide a complete overview of the knowledge required to operate a compliant and well-structured construction business in Australia. Identifying the requirements of the business is the starting point of establishing any construction enterprise. This stage involves determining what must legally, financially and operationally be in place before the business can open its doors or engage in any form of construction work. The key elements include understanding which registrations are required, ensuring the correct licenses are in place, establishing financial systems, developing compliance processes, and determining the internal operational requirements needed to function effectively. For example, a construction business must consider whether it will operate as a sole trader, partnership, company, or trust. Each structure carries different tax implications, reporting requirements, and legal responsibilities. The business must register for an ABN, potentially a company ACN, and GST, if turnover exceeds the threshold. Insurance is another requirement: public liability insurance, workers' compensation, and construction-specific insurances such as contract works insurance. Further, the business must understand its legal obligations under the Building Act, Building Regulations, NCC, Australian standards, and all workplace safety requirements under OHS legislation. Without fulfilling these basic requirements, a construction business cannot legally operate. Identifying these elements early ensures that you avoid legal issues, fines, shutdowns, or penalties. Operational requirements must also be clearly understood. This includes establishing systems for procurement, subcontractor engagement, safety management, documentation control, and financial management. Essentially, identifying the requirements of the business is an exercise in building a complete business framework that supports legal compliance, operational efficiency, and long-term financial sustainability. Difference between legislation and a regulation. Legislation and regulations are often confused, but in the construction industry, the difference is extremely important. Legislation refers to acts of Parliament, laws passed by federal or state governments such as the Building Act, the Occupational Health and Safety Act, or the Competition and Consumer Act legislation outlines the key legal obligations, rights, responsibilities, and enforcement mechanisms that govern how individuals and businesses must operate. Regulations, on the other hand, provide the practical details that support legislation. For example, while the Building Act establishes the requirement for building permits, the building regulations outline the precise details: what documentation is required, what inspections must occur, what compliance certificates must be produced, and how certain procedures must be carried out. Regulations contain the step-by-step requirements that ensure the broader legal obligations are followed correctly. In construction, compliance with both legislation and regulations is mandatory. Ignorance of these rules does not protect a business from penalties or enforcement. As a business owner or builder, you must understand which act applies, what the related regulations require, and how to apply both in daily operations. Understanding this distinction allows you to read the law more accurately, respond to compliance obligations, and adjust your operations based on changes to legislation or regulation updates. Identifying legislations and regulations. Every construction business must recognize the legislation and regulations affecting its operations. This includes identifying the Building Act, the Building Regulations, the National Construction Code, NCC, and relevant Australian standards. These instruments govern every aspect of construction, from site preparation to final inspection. They define mandatory requirements for structural integrity, fire safety, waterproofing, electrical systems, plumbing installation, energy efficiency, accessibility, and more. Beyond construction-specific regulations, businesses must also comply with the Occupational Health and Safety Act, environmental protection laws, contract and consumer protection laws, and employment laws. Privacy legislation, tax legislation, and industrial relations legislation further form part of the regulatory landscape. Identifying these requirements is not something done once. It must be maintained continuously because legislation and regulations change regularly. Amendments to NCC provisions, changes to safety regulations, or updates to taxation laws can have major implications for business operations. To remain compliant, businesses must maintain systems that monitor updates from government bodies, industry associations, standards committees, and regulatory authorities. This ensures that day-to-day operations reflect current legal obligations and that the business remains aligned with industry requirements at all times. Competition and Consumer Act. The Competition and Consumer Act is one of the most important pieces of legislation affecting construction businesses. It aims to promote fair trading, prevent anti-competitive behaviour, and protect consumers from misleading or deceptive conduct. In the construction sector, this Act governs how builders and contractors must advertise their services, present quotes, handle contracts, communicate warranties, and interact with clients. For example, a builder must not misrepresent the quality of materials, exaggerate timelines, or provide misleading pricing. Over-promising and under-delivering can be considered misleading conduct. The Act also applies to subcontractor relationships, price fixing, unfair contract terms, and other commercial practices. A breach of the Competition and Consumer Act can result in significant fines, enforceable undertakings, compensation orders, or even legal action. Understanding this legislation ensures that the business communicates honestly, avoids deceptive claims, and treats clients ethically. In construction, an industry with high costs, emotional stress, and complex service delivery, the importance of compliance with consumer law cannot be overstated. Businesses must ensure their contracts, advertisements, and verbal representations align with the Act. Training staff, reviewing marketing materials, and auditing sales processes are key steps in maintaining compliance. Contravention of industry codes. Industry codes represent agreed standards of conduct within particular sectors. Some industry codes are voluntary, others are mandated and enforceable by law. In construction, industry codes may cover areas such as advertising, safety protocols, professional conduct, or customer service expectations. Contravention of these codes can lead to disciplinary action by regulatory bodies, damage to business reputation, and loss of consumer trust. Some breaches may also trigger penalties under legislation such as the Competition and Consumer Act, Fair Work legislation, or building regulatory frameworks. For example, breaching a safety code could result in WorkSafe intervention. Not following a professional conduct code could lead to disciplinary action by the Victorian Building Authority. Failing to meet subcontractor payment obligations could trigger action under security of payment laws. Understanding the industry codes, abiding by their requirements, and training staff accordingly is essential. A business must not only follow the law, but also align its conduct with the ethical and professional standards expected within the construction industry. Identifying required registrations, permits, and licenses. A construction business must identify and obtain all necessary registrations, permits, and licenses before commencing any work. This includes registering the business structure, obtaining an Australian business number ABN, and registering for goods and services tax GST if required for companies. An Australian company number ACN is also necessary. Additionally, many activities within construction require specific practitioner licenses. Builders, plumbers, electricians, and certain specialised trades must be licensed under state-specific regulatory frameworks. Operating without the required licence is illegal and can result in fines, disciplinary action, or litigation. Building permits are another key requirement. A building permit must be issued by a registered building surveyor before construction begins. Various compliance certificates, such as plumbing certificates, electrical certificates, and waterproofing compliance documents, must be obtained at different stages of the project. Identifying and managing these requirements ensures that all work is legally authorised, properly documented, and compliant with the regulatory framework. It also provides consumers with confidence and ensures that the business can defend its actions if disputes arise. Failing to secure the correct licenses, permits, or registrations can shut down a project, invalidate insurance, or expose the business to legal action. This area must be handled with the utmost attention to detail. Tax registrations. Tax registration is a mandatory business requirement. Every business must register for an ABN and determine whether it must register for GST. Registration is compulsory when annual turnover reaches or exceeds the specified threshold, but many construction businesses voluntarily register earlier to maintain professionalism and meet subcontractor expectations. Businesses may also need to register for pay-as-you-go (PAYG) withholding if they employ staff. This is required when the business withholds tax from employee wages. In some cases, if a contractor does not provide an ABN, the business must withhold tax under the No ABN withholding rules. Construction businesses operating as companies must comply with company tax obligations, including income tax reporting and payment. Businesses operating under trust structures have additional reporting requirements. Identifying these tax registration needs ensures compliance with ATO regulations and prevents penalties or interest charges. Incorrect tax registration can lead to administrative issues, delayed payments, and reputational harm. Establishing accurate and timely tax registrations lays the groundwork for smooth financial operations and compliance throughout the life cycle of the business. Business company registrations. Business registration is the formal process of establishing your organization's legal identity. A sole trader must register an ABN and may register a business name. A company must register with ASIC to obtain an ACN. Partnerships and trusts must establish formal agreements, tax file numbers, and ABNs appropriate to their structure. Selecting the correct structure is an important decision because it affects tax responsibilities, liability exposure, ownership transfer options, and administrative requirements. For example, sole traders have full personal liability for business debts, while companies offer limited liability protection. Additionally, construction businesses must ensure that their trading names are registered, their addresses are up to date, and their ASIC or ABR details remain accurate at all times. Any changes to company directors, business addresses, or shareholder information must be lodged promptly. Proper business registration ensures that the entity is legally recognized and able to enter into contracts, open bank accounts, apply for licenses, and engage workers or subcontractors. Without these registrations, a business cannot operate legally or professionally within the industry. Tax BAS requirements. The Business Activity Statement, BAS, is one of the most important financial documents a construction business must complete. BAS is required for businesses registered for GST and must be lodged either monthly, quarterly, or annually, depending on turnover and ATO requirements. The BAS records GST collected on sales, GST paid on business purchases, PAYG, withholding amounts, PAYG installments, and sometimes fringe benefits. Tax accurate BAS. Reporting ensures that the business meets its taxation obligations and avoids penalties for late or incorrect lodgement. Construction businesses often deal with multiple suppliers, subcontractors, and invoicing cycles. This increases the complexity of GST reporting. Without a proper bookkeeping system, BAS preparation can become overwhelming and error-prone. Many construction businesses outsource BAS preparation to a bookkeeper or BAS registered agent to ensure accuracy. Others implement accounting software such as MYOB or Xero to manage receipts, invoices, payroll, and cash flow. Understanding BAS requirements is essential because incorrect BAS submissions can trigger ATO audits, penalties, or repayment obligations. Accurate BAS management contributes to strong financial governance and long-term business sustainability. Business Activity Statement, BAS. The BAS is more than just a tax form. It is a snapshot of the financial health of the business. It provides insights into spending, earnings, GST obligations, and payroll liabilities. By reviewing BAS data, business owners can identify cash flow issues, evaluate profitability, and track expenditure over time. For construction businesses, the BAS cycle often aligns with project cycles. Large purchases for materials, equipment, or subcontractor payments may create fluctuations in GST liabilities. Monitoring BAS data helps the business plan for future tax payments and maintain adequate reserves to meet ATO obligations. Lodging the BAS accurately and on time demonstrates professionalism and financial responsibility to stakeholders, including banks, insurers, and regulatory bodies. A history of consistent, accurate BAS lodgement supports loan applications, insurance renewals, and contract negotiations. Understanding the BAS process is crucial for all construction business operators because it forms a core part of financial governance. With strong systems in place, businesses can minimize risk and maintain consistent compliance with tax legislation. Identify operational requirements for a building and construction business. A construction business must establish clear operational requirements to function effectively. This includes determining staffing needs, subcontractor engagement processes, procurement systems, project management workflows, safety procedures, and quality assurance frameworks. Operational requirements ensure that the business can deliver projects efficiently, maintain standards, and manage risk. For example, the business must develop schedules for project delivery, assign supervisors, identify equipment needs, implement communication systems, and coordinate material deliveries. Subcontractor onboarding processes, site induction procedures, safety documentation, and SWMS collection must be integrated into daily operations. Operational requirements also include establishing procedures for document control, contract administration, defect management, and client communication. Without these systems, projects can experience delays, cost overruns, disputes, or compliance breaches. Understanding operational requirements ensures that the business has the tools, resources, and procedures needed to manage complex construction activities from planning to completion. Strong operational foundations support consistency, quality, and client satisfaction. Update knowledge of current trends in the building and construction industry. The building and construction industry evolves constantly due to changes in technology, legislation, materials, environmental standards, and market demand. Updating knowledge of industry trends is essential for maintaining competitiveness and compliance. Modern construction trends include sustainable building practices, prefabrication, modular construction, energy efficiency requirements, digital documentation systems, and advancements in construction equipment. Builders must also keep up with changes to NCC requirements, Australian standards updates, and new safety regulations. Market trends, such as demand for double-storey homes, townhouses, or energy-efficient designs, also influence business strategy. Staying aware of these trends allows businesses to align their service offerings with client expectations. A successful business implements systems to monitor trends through industry publications, government reports, training programs, professional networks, and membership with organizations such as the Housing Industry Association, HIA, or Master Builders. Keeping industry knowledge current ensures that the business remains relevant, compliant, and able to meet evolving market conditions. Industry trends. Industry trends shape the direction of the construction sector. Some of the key trends include the increasing focus on sustainability, the adoption of digital tools, the rise of prefabricated components, and new architectural design preferences. Clients today expect energy-efficient homes, smart home technologies, high-performance insulation, and environmentally responsible materials. Builders who stay ahead of these expectations position themselves as leaders in the market. Other trends include skilled labor shortages, the need for improved project management systems, and increasing regulation in safety and compliance. Understanding these trends enables the business to adapt its processes, invest in training, and plan for long-term success. Identifying and responding to trends is essential for maintaining competitive advantage, ensuring compliance with evolving standards, and providing services that align with modern consumer expectations. Key government sources for industry information. A construction business must access reliable government sources to stay updated with legislation, regulations, and industry changes. Key sources include the Victorian Building Authority, VBA, the Australian Building Codes Board, ABCB, Safe Work, Australia, WorkSafe Victoria, the Australian Taxation Office, ATO, and the Australian Securities and Investments Commission, ASIC. These organisations publish updates on building regulations, NCC amendments, safety legislation, tax changes, business registration requirements, and compliance guidelines. Regularly monitoring these sources helps businesses adjust their operations to meet current legal standards. Government websites, newsletters, alerts, and training programs provide valuable insights into industry requirements. By integrating this information into business systems, operators ensure their practices remain compliant and up to date. Project cost estimation. Project cost estimation is one of the core responsibilities in a construction business. Accurate estimating ensures profitability, controls risk, and supports contract negotiations. Estimators must consider labor costs, material prices, subcontractor fees, equipment hire, overheads, and contingencies. Construction businesses must develop reliable estimating systems supported by software tools, historical data, and supplier relationships. Poor estimation can lead to financial losses, disputes, delays, or incomplete projects. An effective estimating process supports tender submissions, contract management, and financial forecasting. Understanding estimation methods allows the business to assess project viability and maintain financial stability. Taxation construction businesses must understand their taxation obligations, including income tax, GST, PAYG, withholding, payroll tax, and contractor tax requirements. Tax compliance is essential to avoid penalties, ensure accurate BAS reporting, and maintain financial integrity. Businesses must track income, expenses, asset purchases, depreciation, and subcontractor payments. Understanding taxation allows the business to plan effectively, maintain cash flow, and meet ATO deadlines. Taxation systems should be integrated with bookkeeping and accounting processes to ensure accurate financial reporting and compliance. Payroll. Payroll management is essential for businesses employing staff. Payroll must meet fair work requirements, include correct wage rates, overtime, allowances, leave entitlements, and superannuation contributions. Construction awards and agreements may have specific conditions that must be followed. Payroll errors can result in back payments, penalties, or legal disputes. Establishing a reliable payroll system ensures that employees are paid correctly and that the business complies with employment law. Accounting, financial reporting, bookkeeping. Strong financial management systems are crucial for construction businesses. Bookkeeping tracks daily transactions, while accounting provides financial oversight and reporting accurate record-keeping supports, BAS lodgement, tax planning, budgeting, and project cost control. Financial reporting provides insights into profitability, cash flow, liabilities, and operational performance. Construction businesses must use reliable accounting software to track income, expenses, payroll, subcontractor invoices, and project costs. Good financial systems allow businesses to make informed decisions, meet compliance obligations, and maintain financial health. Legal. Construction businesses must understand the legal environment governing their operations. This includes contract law, safety law, consumer law, employment law, and building law. Businesses must implement systems to ensure legal compliance, manage contracts effectively, and avoid disputes. Legal documentation must be accurate, clear, and aligned with legislation. Engaging legal professionals when necessary helps ensure that contracts, agreements, and policies meet legal standards. Understanding legal obligations protects the business from liability, strengthens client relationships, and supports long-term sustainability. Business systems for managing financial requirements. Financial systems must be developed to manage invoicing, payments, expenditure tracking, payroll, BAS preparation, tax planning, and budgeting. These systems ensure accuracy, efficiency, and compliance. Construction businesses often use integrated accounting software to streamline financial processes. Reliable systems reduce risk, prevent errors, and support financial decision-making. Strong financial systems contribute to business resilience, compliance, and profitability. Establishing systems and developing policies and procedures. Policies and procedures form the backbone of business governance. They outline how tasks are performed, establish standards, and provide clarity for staff. Policies cover areas such as safety, quality, communication, subcontractor engagement, document control, and customer service. Procedures describe step-by-step processes for completing tasks. Together, policies and procedures ensure consistency, reduce risk, and support compliance. Developing these systems is essential for scaling operations, training staff, and delivering consistent results. Communicate policies and procedures to the organization. Policies and procedures must be communicated clearly to all staff, subcontractors, and stakeholders. Communication may occur through training sessions, inductions, manuals, meetings, or digital platforms. Effective communication ensures that everyone understands their responsibilities, follows established procedures, and complies with business governance. Clear communication reduces confusion, improves productivity, and strengthens compliance across the organization. Business programs for remaining up-to-date and compliant businesses must adopt programs and systems to stay updated with industry changes. These programs may include continuous professional development, industry newsletters, regulatory alerts, software updates, training workshops, and membership with industry associations. Remaining updated ensures compliance with changing standards, legislation, technology, and market expectations. Industry changes and business changes. Industry changes may include regulatory updates, technological advancements, market demand shifts, and safety requirements. Business changes may involve restructuring, new management systems, new projects, or process improvements. Understanding these changes allows the business to adapt, remain compliant, and maintain competitive advantage. Measures to stay updated with industry changes. Businesses can stay updated by monitoring government websites, attending seminars, joining industry associations, subscribing to newsletters, and participating in training, reviewing NCC updates. Safety regulations and environmental standards ensures ongoing compliance. Implementing internal review systems helps ensure the business continuously adapts to changes. Conduct a risk assessment. Risk assessments identify potential hazards, assess their likelihood and consequences, and develop controls to minimize risk. In construction, risk assessments are essential for safety, financial planning, compliance, and project management. A thorough risk assessment ensures that the business is prepared for adverse outcomes, understands potential impacts, and implements mitigation strategies. Risk assessment and contingency. Planning. Risk assessment is followed by contingency planning, which identifies alternative actions to take if a risk event occurs. This planning ensures the business can respond effectively to disruptions, delays, financial issues, safety incidents, or compliance breaches. Strong contingency planning improves resilience and ensures that the business can continue operating during unexpected events. Performing the risk assessment. Performing a risk assessment involves identifying hazards, analyzing likelihood, assessing consequences, determining risk levels, and developing control measures. Documentation must be maintained, and reviews must occur regularly. Risk assessments support informed decision-making and help prevent incidents or losses. Financial risks. Financial risks include cash flow shortages, cost overruns, incorrect estimates, unpaid invoices, taxation errors, and market fluctuations. Construction businesses must implement strong financial controls to manage these risks. Monitoring budgets, tracking costs, and conducting financial forecasting reduces exposure to financial instability. Types of analysis in risk assessment. Risk assessment analysis may include likelihood analysis, consequence analysis, cost-benefit analysis, qualitative risk assessment, or quantitative risk assessment. These methods help evaluate risk severity and determine appropriate controls. Understanding analysis methods supports strategic decision-making and risk reduction. Example, risk assessment report. Likelihood. A risk assessment report typically includes risk descriptions, likelihood ratings, consequence ratings, risk levels, and recommended control measures. Likelihood measures describe how probable a risk event is. Ratings may range from rare to almost certain. Documenting risks allows the business to implement proactive measures, maintain compliance, and protect its operations from disruption. Today we have explored the complete framework for identifying business requirements in the construction industry. We examined legislation versus regulation, identified key legal and regulatory requirements, reviewed tax responsibilities, BAS obligations, and business registrations. We explored industry trends, operational needs, financial systems, policy development, and communication strategies. We also covered risk assessments, contingency planning, financial risks, and analysis methods. Understanding these areas ensures that businesses operate legally, responsibly, and profitably. By applying the principles in this session, you will strengthen your business foundations, improve compliance, reduce risk, and build a professional, sustainable construction enterprise. Don't forget, our LMS contains interactive learning video series. Please watch them as part of your study and link them to today's session. To support your study, we've introduced the AI Playbook. This tool simulates assessment questions and provides guidance. You can access it from your assessments. Thank you for joining me today. I'm Sudha Udaya, and I look forward to seeing you in the next lesson.